The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with us today for this very important webinar. And good morning to our friends in the Southern Hemisphere, in the shaky Isles of New Zealand and down under in Australia. We've got a great roll-up today, and it's lovely to have you with us. Akhtar's with us. You see, we get these voices from the past that keep coming back. Akhtar's a great old mate of mine. He's done a number of tutorials. He's a lovely guy. Alan, Alan Varian gave me the advice to come and live in this part of the world when I moved back from New Zealand to the Gold Coast. I thank you for that, Alan. The children are doing very well. We've got a lovely place here in Talai, which is great. And here's Sage. It's 1:30 in New Zealand, practically the weekend. Yes. Well, I give you another hour, Sage, and you can hop on your fancy motorbikes and disappear into the big world. Albert, Alex Shakarupa. I hope I said that right, Alex. Haven't seen you for a while. Daryl Core, my good friend, who's coming over to. Good morning, mate. Who's coming over to Waiheke Island in the Hauraki Gulf of New Zealand for our next tutorial at the first week of December. Mr. Dick, there's Dick, yes, hello. Good, Bill Daly. Well, Bill's doing a lot of work on stocks, which I know nothing about, but he's using one of our programs. He's going to let us know how he's going soon. Bill Ford, nice to see you. Bill, you're coming to Waiheke, I hope. Lots of other guys. Brian Baird, I had breakfast with Brian a couple of months ago now. He's a lovely guy. We have some great people here. Chase, who worries about my smoking, and I do too. Craig Eyes, James Gillies. James is coming to the Waiheke tutorial. He's the first guy in, which is great. Jerry Winter's with us. Jerry's our broker in Chicago. Jerry, great to have you with us, mate. Justin and Hank have been doing a tutorial by video this week, still doing it. We'll finish that off next week. Lovely to see them here. Marilyn, my friend, I haven't never met Marilyn, but she's been a member on and off for a long time. I'd love you to come to Waiheke, Marilyn. Michael Pell. Michael's been a tutorial guy. We had a great time with him in Waiheke last time we did it, which was 2 years ago. He's now in Fremantle. Michael, get your tail over to Waiheke in December. It'd be great to catch up with you again. And Norbert, who's living in Canada, worries about the Canadian market. Dick Brewster, he's a great old mate of mine. There's Rob H. Rob's my mate in New Zealand. He's a terrific trader. He knows an awful lot about markets. He's a very, very clever guy. Anyway, and of course, Sage, my dear friend, and Tom Janovic. Tom is in Europe, so it must be all sorts of ungodly hours for you, Tom, but nice to see you here. Tom recently wrote to tell me that his firm, he's a broker, had signed up with someone to provide them signals, and it's not us. And I said to Tom, well, good luck, mate. And I mean it, but you will not find anything that compares with the Danielcode, our mate. And finally, Tony Diamanico, nice to see you here. Sue Lee. We don't have many girls come to these events. We should have more. We love girls. I'm sort of kind of strange like that. Anyway, let's move on, folks, because I've got 110 things to talk to you about today. And this webinar has got to finish fairly promptly today because I have an unbreakable appointment with my daughter to go and see the Moscow State Circus, which is currently at the Gold Coast. Now, I saw an original of the Moscow State Circus about a long time ago, 50 years ago, I guess, with my parents. God bless them. And it was, excuse me, absolutely huge. In those days, you had elephants and lions and tigers and dancing horses and monkeys and anything you could think of. It was just a fabulous show. I think they billed it's the greatest show on earth, and it probably was. We don't have that anymore because of animal rights, which I support. It's cruel to keep these animals in captivity and make them perform, and thankfully that's been stamped out. So, but I guess we get acrobats and jugglers and balancing acts and extraordinary things. So that's where I'm going to go this afternoon, folks. So we're going to have to finish fairly promptly, and I've got 500 things to tell you. You'll see here that I've called this part 1. This is a huge, huge topic. The why, what, when, and where of market turns. And it's absolutely crucial to your trading knowledge. If you don't get this stuff, you're never going to be very good at it. I want to just, I'm going to break this up a couple of times because I want to show you some charts. Usually that would come at the end, but I know that we always have some cynics here who don't believe what I tell them. In fact, my mate Rob H, who's just sent me a private message here, started off as one of my greatest critics. And after we'd battled and bashed for a while and met up and had a talk, and he'd followed it, he was kind enough to say to me, "Look, I accept all this is true, and it's quite amazing." And Rob and I, of course, are great mates now. So, Rob, if you do have to cut and run, I'll understand, and hope you have a very pleasant weekend, mate. Okay, so let's roll on. And the first slide I have to show you, you'll be pretty impressed, folks. I actually did some work to get everything together on the slide for you today. And the first slide that you can see now is called In Praise of Bernard. I had an email yesterday from this gentleman, Bernard, who many of you know. Bernard's an extraordinary character. He's a wonderful guy, and his mate Gabriel. Between them, they're the two best-looking guys you've ever seen in your life. They work out every day. They're terribly fit. They're masses of muscles, very fit guys, a great company. They're an absolute ball. If any of you ever get a chance to talk to John Egan, if you meet him up at a tutorial somewhere, he can tell you about a night out he had with Bernard and Gabriel in Colorado Springs at some of the nightclubs there. I mean, it's the most hilarious story I've heard in years. I'm still laughing about it. But Bernard hasn't been too well. So those of you that know him, I know a lot of you here have met Bernard at tutorials. Those of you who have met Bernard, you might just drop him a line and wish him a speedy recovery. It's nothing life-threatening, but it's been pretty debilitating for him. I like Bernard a great deal. He's a great mate, but he really personifies the attitude of our very best Danielcode traders that I'd like to try and get through to you, because a lot of this is about attitude. And Bernard rang to say that he's trading the GMAG program, which is now quite an old program. It's one of the very earliest programs that I invented years ago. It's fairly tough to trade. It requires a lot of concentration and a lot of discipline. I know Sage trades it all the time, and Bernard does too. Since then, we've gone on and got much more sophisticated programs that are much easier for you to see and learn. But I don't think we've got anything that's much better. And this is the Bernard telling me about his trading. If you have a look at this sheet, he's trading at 0.6% risk. Now, we recommend 2% risk. So he's down at less than half of our risk. And as you can see, the first 6 months of 2015, he's averaged 14% a month, which is 168% on half the risk that we recommend. So that's well over 300% per annum. And he's been doing it for years. And Bernard first came along to me to do a tutorial. And I did that year, must have been about 2010, I think. Don't ever quote me on dates, I'm hazy. But I did 3 tutorials in LA, in America, I did one after the other. I did the first one in Los Angeles, and then the next one a week later in Colorado Springs, and the next one a week later in Chicago. And Bernard came to the first one in Los Angeles with Gabriel. And they enjoyed it so much, they came to the second one in Colorado Springs. They came to the third one in Chicago. And sometime later, he came down to New Zealand and did a tutorial in Taupo. We have some memorable photos from there, Sage, do we not? The point is that he's just stuck to his guns. He's a big-time trader. His father's a Swiss gentleman, had a very big grain merchandising business, and which Bernard took over. But he knows an awful lot about markets, and he trades the GMAD, that's our Danielcode program that I teach at tutorials, and he trades it religiously. And you can see that these are the sort of returns. It's well over 300% a year on our 2% risk that we recommend, are quite extraordinary. And, I teach that at tutorials. So I hope a lot of you are going to come to Waiheke in December, and I'll teach you GMAG, and I'll teach you a whole lot more as well. Let's move on and answer some of these questions. Now, you see I've called this webinar Part 1. This is a very, very in-depth thing that I can't possibly cover in an hour, but we will do Part 2 and probably Part 3 as well, because the more you know and understand about why markets turn, and when and where, because at the Danielcode we tell you all of that. We teach you at tutorials how to do it for yourself. Do it for yourself, but we do it all for you anyway. So you can subscribe to any of these services. Why do markets turn? Market participants are insecure. They're perpetually seeking confirmation. So you'll see here, this is Aussie USD. It wouldn't matter, could be any chart, but you'll consistently see this pattern of the market pulling back to find support. And essentially, it's participants who've had a good run up and they're seeking to see if the support's still there. And very often the support is quite linear, by which I mean that we can tell you exactly where that support will be with the Danielcode numbers and the Danielcode trading channels. And people use a whole lot of stuff to try and give themselves confidence about markets. It's all actually support and resistance, but there's a big emphasis put on the commitment of traders, the commitment of traders report here, which a lot of people have great faith in. I have no faith in it because it's simply an amalgamation of traders' positions in different categories: commercial, non-commercial, big traders, small traders, and the common wisdom is that the small traders, the small retail traders, will always be wrong. For those of you who've listened to me for long enough, my view is that almost everyone's wrong, and sometimes long and wrong, but I don't think big traders have any real monopoly on knowledge. They're wrong as often as everyone else. The only people who are not wrong are people who are following the Danielcode. What makes markets turn? Markets turn when they reach their designated targets. And that leads us to the question of exhaustion and random walk. For those of you that don't know, a few academics got together some years ago and did a huge analysis of financial markets. And they came up with the theory that markets can't be forecast. There's no correlation one range to the next. There's no place at which you can say this market's going to turn or stop or anything else. And they called that random walk theory, and it became very, very famous. And they got the Nobel Prize for it, which shows you that you can fool all of the people almost all the time, because it's absolute rubbish. And I have been saying for years and years that it's absolute rubbish, because we forecast market turning points every week with some degree of accuracy, I might say. Brian Coleman, who was out here, he came out from New York to visit me last week. Not even sure if he's with us today, Brian. But Mr. Deck says random walk is crap. That's a very rude word, Deck. I wouldn't say that, but you're right, it is. And so are all the other financial theories that are not Danielcode theories. But Brian was telling me that the Wharton Business School, which is deemed by New York to be the #1 business school for trading, has finally got some really, really smart guys saying they think random walk is wrong. And of course, I've been telling them that for years, but not enough people listen to me. So I'm very grateful to have you lot here today who do listen to me. And this, of course, is the S&P. And talking about random walk, what I've picked here is the 9/11 low, that dreadful, dreadful disaster in 2001. And I picked that to show you because you couldn't find anything less expected, less planned for, less factored into markets. In my 28 years odd of trading, that's been the most market disrupting incident that I've ever seen, as you know, of the dreadful planes crashing into buildings in New York. The New York Stock Exchange was actually closed for a number of days, only I think the third time in history that's happened, including during the wars. So you couldn't find a more random event. But look where that low finished up at. 944.93 was the Danielcode 74% retracement from the dot-com high in March 2000. So that number was in stone way back in 2000. As soon as that high was in place, you could have put those retracements on, and that crash low after the 9/11 attack went exactly to that Danielcode number. And the three red lines you see on there are fourth and fifth seal lines forecasting that low. So sometimes it's certainly never a random walk, but sometimes you will hear people say, oh, this market will exhaust into a number. And sometimes it does, but that's not a terribly enlightening trading expression, because markets have a time that they run to. And we teach you that at tutorials, as well as try and give you some insights into it here, and talk to you every week about that in our fourth and fifth seal studies, which are available at the website. And what markets do is they go ahead of time and they get behind time. And when they get ahead of time, they have to stall, which is when you often see consolidations and lots of small bars. And when they get behind time, they have to catch up. But markets know these times, and that's why you'll often get what is called an exhaustion bar, or a big bar into those turns, and they do it both ways, up and down. So all of that drama we had with the S&P and equities and currencies and everything else, and certainly the currencies, a lot of them finished with big exhaustion moves a month or so ago. You'll see that on your charts. Okay, so let's move on from that. And when do markets turn? Markets turn when their fourth seal time cycles expire. And this is a copy of the fourth seal chart prepared by Frank DB, who helps me with the fourth seal. And you can see that this market, this is gold, bottomed exactly at the 59. We use these longer term cycles on the 6, 12 and 24-day charts, but I'm going to show you how you can use them on daily charts as well, with the addition of a couple of new tools which I've been teaching lately. But just to give you the idea, this market put in its low on a 59 cycle, which normally gives us tops, but they can invert. And then it rallied up and gave us a high at the 62 cycle, which normally give us bottoms, but again, it can revert. But you could look at the fourth seal on the Danielcode website charts, and you will see all of these markets turning exactly at these Danielcode time cycles. Where do markets turn? They turn at and only at the Danielcode blue, red, and black lines always. I've talked to you about this before, and I've told you that there's some 30,000 charts available in chart archives at the Danielcode website, if you'd like to prove that for yourself. I don't always seem to get the message across to you that how real this stuff is. This is a chart of T-bonds, and it's a chart taken before we got today's data in, because I prepared a lot of this stuff for you last night. But keep a look at this chart and have a look at what happened with today's trading, Thursday's trading. The high came in at 158.19 today. Have a look at this chart, the two blue lines. The next one's up 158.10. The next one up is 158.19. In other words, the market ran up exactly to the Danielcode blue line, and it closed for the day at 157.28. And you'll see we have a red line at 157.27. That's where it closed, one tick away. It's not, I have had people say to me, silly people, oh, you only show us the good stuff. I don't only show you the good stuff, I show you everything, and I'm showing you this stuff in real time. In a few moments, we're actually going to go to the Danielcode website and have a look at the members charts, which were posted on Wednesday night, and you can see from them the exact numbers, and you can compare that with the charts you got from today's trading, and you'll see these markets going exactly to the Danielcode numbers. Here's silver, the same thing. Why, when, and how do markets turn? Have a look at this. I'll get my little spotlight out to show you, this is what happens. It goes down to the blue line, it rallies up. This was a 50% retracement. It goes down, finds support, it goes up, it hits the blue line, it comes down, it starts ticking off all of these retracements, and goes down to the next support, which is the Danielcode blue line at 1440.5 on this chart. This is silver. Let me find it for you. Today's low came in at 1443.0, so it's still hunting for that low of 1440, which is what these markets do. Let me see if I can move this on to the next chart. That was silver. Here's sugar. Look what happens here. This is what makes markets turn. Here's the Danielcode blue line. Off it goes, rallies up, hits the red line, the first of them here. Support, goes back, tests the support, just runs between these red lines the whole time, comes down. This was an 89% retracement, and then it's off again. Okay, so this is the chart from Wednesday night, but have a look at sugar, and we'll go back to look at this chart on the Danielcode website, because today's bar finished up with a high of 1327. Excuse me, and when you look at the website, you'll see the next blue line was exactly at 1327, which amongst other things is why we have a blue line sell in sugar today. Here's copper, the same thing. You can see how it ran up into a blue line. There was its blue line sell, which we told you about a couple of days in advance. Down it comes, hits the black line, very powerful, 223.20, goes up and closes on the blue line at 225.20. This market is screaming at us, I know what these numbers are and I'm following it. Now, you might think that's overstated, but I promise you it's not. Markets do this all the time, and there's 30,000 charts on the website for you to have a look at. I have never seen anything in my 28 years in the business as accurate as the Danielcode, or even close to it. And Tom, you ought to do some more work on the Danielcode, because I think that you missed a great opportunity by signing your firm up with someone else. I bet you their support and resistance doesn't even get close, because people don't really understand it. But look at this. This market's come down. It said, I know these numbers. I've hit the black line. I'm going to close on the blue line. What happens the next day? It pushes down just above the blue line, says, oops, sorry, does a key reversal bar, and it's off. And this was a buy signal for you guys. It was a one-day trade. Made a lot of money. Nice, really nice trade. And I've stuck in here a currency, GBP, JPY, just for the purpose of showing you that it does exactly the same thing. All of these markets turn at the Danielcode numbers, and they all turn at Danielcode time cycles. Here's another currency, just more of the same. 132, 182 down here. This was a Danielcode retracement. You all have if you're a member of the Danielcode, you get the Danielcode studies for free. It's called the Danielcode Library. If you're a member, you should have that. You can put these lines on your charts yourselves for those ones where I don't publish the charts, but we're doing them all the time and creating the signals anyway. But you can put these on your own charts and update them and prove all this stuff yourself. So here's the rally, up it goes. Here's the little target recognition. Not really quite accurate, is it? We're looking for 137.264. The high goes through. The close is just under. Look what happens the next day. It says, I know this number, and it kicks right onto the number just to confirm it. Same thing happens down here. It comes running down into a blue line, through the blue line, key reversal bar, little rally back up, and on Wednesday, what's it do? It goes exactly to the 133,571 retracement, again saying I know these numbers and I'm tracking them. And then we have the fourth seal and moonbeams. The fourth seal is an angle, and it's a technique of forecasting market highs and lows that I invented many years ago, and I'll teach you at the tutorials. And to that, we traditionally use the fourth seal on the longer term charts, the 6, 12, and 24-day charts, and that's where we use them. But we've now started telling you about moonbeams, which is a technique we use to forecast highs and lows on daily charts. So the blue lines on this chart, this is Aussie USD. The blue lines on this chart are moonbeams. The red line you can see is a fourth seal line. They have slightly different rules, but they're very simple. There's only 3 parts to each of these rules. And once you learn them and practice them, you will be getting just exactly what we've got here. And this is angles combine elements of time and price. If you think about it, this axis up here, this is price, this is the x-axis, this axis across here is actually time. So wherever you have an angle, if you take any point on that angle, it will have a time and it will also have a price. And these angles are another way of showing you that time and price are squared, by which I mean that the market is at a known Danielcode number or price sequence, and it's also at a known Danielcode time cycle. And you can see that this recent low in the Aussie USD right here came at a Danielcode time cycle, and we had price as well, and issued a buy for that, and it then ran up straight into another moonbeam, which stopped the rally, and it's now working down the bottom, deciding whether it's going to go down further to its next target or make a temporary low here. So that's the sort of accuracy you can get with this stuff. It does surpass anything else I know of, and I'm going to teach you all of that at the next tutorial, which is at Waiheke Island in New Zealand. It's on the 7th to 10th December. Those of you who are coming a long way, mark your diaries. Daryl Coor, I know, is coming. James is coming. We've got quite a few people coming. I hope to get more of our people who did their last tutorial to come out as well and brush up on their stuff. They need to be like Bernard and Sage. I think Sage and Daryl between them have probably done 16 or 18 tutorials, maybe more. You need to keep hitting this stuff, picking up something new every day, but also refining your skills, proving your skills, meeting with other Danielcode traders. There's the beach at Onitangi, where we have the tutorial, and it actually really does look like that. This, in fact, is just the front of the hotel we stay at. These are the Onitangi Beach Apartments. It's a small 2-story building. There's not all that much else at this end of the island, which is why I like it so much. But as you can see, these photos are just completely, they are what they are. We're right on this beautiful beach there. It's a great place for families. Bring your girlfriends, wives, sweethearts, everything else, and your children as well. It's a wonderful place. So I hope to see some of you there. Let's see what else we've got. We've got our compliance sheet to show you, which I'm required to show you, and always want to tell you that there is considerable risk involved in futures trading, and even more risk if you don't know what you're doing. I do worry about a lot of you that come to these webinars that are not Danielcode members. So I know that you don't actually understand all of this stuff, and I hope that you're very careful with it all, because if you know what you're doing, you can make a fortune. If you don't know what you're doing, it's equally easy to get into trouble. Now, I wanted to just show you a number of these charts before we go much further. I think I showed you the T-bonds chart, and I want to show you the sugar chart and also the S&P chart. I'll show you the T-bonds chart to start with to prove my point. So this is the members charts, and this was published on Wednesday night. They're put out twice a week, Sunday night, Monday night, and Wednesday nights. These are published, and you can see that the next level up, that's where the market was after Wednesday's trading. And you can see, you have a look at Thursday's trading today. You've all got your charts there. The high today, 158.19. And here it is. Here's our next blue line number, which was on the members charts, 158.19. The close today, 157.28. There's our red line there, 157.27. That was one I wanted to show you. The other I promised to show you was sugar. And I'm showing you these because I don't want people to say that I only show you the good stuff. It's all good stuff. Markets do this all the time. And that's the difference with the Danielcode, so far as I know. It's the only trading systemology that shows you in advance where markets are going to go. When you get good at this stuff, when they're going to get there. So let's have a look at sugar. You can see the members chart there. The high today in Thursday's trading was 13.27. Here's the next Danielcode blue line, folks, 13.28. One tick off. And it closed pretty much up there at 13.26. Target recognition is valid either at the chart high-low or on the close. You can see in this last bar, Wednesday's bar, this market closed right on that blue line, 12.88. We had it there. The close of that bar on Wednesday was 12.88, exactly to the tick. Now, it doesn't always happen like that, but it's usually very, very close. And by that, I mean a handful of ticks. It's quite extraordinary. I also want to show you ES, which is not as dramatic, but to show you that these markets do this thing all the time. Here's the members charts for the S&P from Friday night. You can see that we had this great target recognition right here, this bar for the ES put in its low. On Monday, it made its low at 1868.75. The number we were looking at was 1868.50. That's one tick. This market trades in quarters. Almost perfect target recognition. The next day, little push through, pull back. That's really the market's way of saying, oops, sorry. I know I'm tracking these markets and I should be paying attention, which it does because next day you get your blue line buy, which we posted, and off it goes. And today, it ran a little bit higher. The high today was 1929.50, and you can see that it's just broken through this next Danielcode retracement of 1928 and probably got a bit further up to go yet. So I want to show you that just to ensure that nobody said I only show you the good stuff. I show you everything. And this, in fact, is the fourth seal here, our service which you can subscribe to. And you can see these are the charts I showed you earlier of the market turning at these Danielcode time cycles. We put these time cycles on the charts for you weeks, sometimes months ahead, so that you're not surprised. And we use 6, 12, and sometimes 24. This is the one I showed you, 6 period turning at the 59. And we were talking about that a good 5 weeks before the turn came. So you should know this stuff before it happens at the major turns, because we certainly provide that service. And if you're interested in the fourth seal service, these are the markets we cover. DAX, S&P, crude oil, natural gas, copper, T-bonds, DX, and gold. So now let me move on and show you the next thing of great interest I had for you. And this is a research program. Perhaps I should start by showing you this 6-day chart. I always like to keep you up to date on trends and what's actually happening in the market. This is our most important chart for market trends, and we've been saying since March 2009 that this market is a bull market and it's an uptrend. And what would be the signs? This blue line up through the middle here, for those of you not familiar with this work, is the median of the Danielcode trading channel. As you can see, it's very precise. It's defined this market perfectly ever since the first push out on January 2010. And those of you who believe markets are random, have a look at this. This market has just worked its way inside the Danielcode trading channel. 1 standard deviation up, 2 standard deviations down, back to the median, and so on. It just bounces off these numbers all the time, and the Danielcode trading channel controls all markets. And you can see back here, these have all been 1 standard deviation moves, except for this move, which came in October 2011, when is the only time that it tested 2 standard deviations from the mean. Now, our definition of a trend change, don't forget, trend is always a function of time. So there's usually, in fact, there's always more than one trend going on in a market, and depending on what time frame you're looking at, will tell you what the true trend of the market is. This is a 6-day chart. Each bar is 6 trading days, and for our definition of trend, a close below 1 standard deviation of the mean is our first signal that the trend is ending, and a close below 2 standard deviations of the mean is our confirmation that the trend has ended. So you can see we've already had one close here below 1 standard deviation of the mean that ended September the 4th. This next bar 2 along September the 23rd, it closed outside the 1 standard deviation of the mean, and the current bar we're on ended yesterday, so we've had 3 closes below 1 standard deviation from the mean. So that's our first warning that this trend might be over. But to confirm it, as you can see back here, this market's quite capable of going down and testing the 2 standard deviation from the mean, and that doesn't destroy the trend. The trend continued intact all the way along. So our next signal, the 2 standard deviation from the mean, is down about here, folks. It looks to be about 1829, maybe 1830 thereabouts, 1825 to 1830. I'm going to pitch on 1827, look pretty good. We would require a close below 2 standard deviations from the mean on the 6-day chart to declare that this bull market is over. So it's not over yet, but we certainly have a number of warning signs. And excuse me, we can't trade 6-day charts. This is our analysis part of our work. And from here, we need to go to our daily chart to get the signals. And as you know, we hardly ever miss one of those. We've had you absolutely in tune with these markets. In fact, you know, we're starting the 4th quarter now. We should have had a 1-week break at the end of the 3rd quarter, but the trading's just been so fantastic. I can't tear myself away from it, even though I'm sure most of you could do with a 1-week break. We might do that in a couple of weeks anyway. We try to take a week off each quarter to refresh and recharge and catch up on our domestic chores and a few other things. But the trading this year, 2015, is the best I can remember. The best on record. Has been absolutely unbelievable. Okay, so that's all of that. And I'm going to show you something else that I want to start to get you folks thinking about. And this is a program called Fractalian that I've been developing for years and years. And I actually invited members to download this program during the LA tutorial in May of this year. So a large number of you have had this program available for 5 months. And I haven't had one comment from any of you, which I guess goes to show that you haven't been doing your work or you've been too busy. or you found out all about it and haven't told me anyway. But I want to run through quite quickly 5 or 6 markets. I want to show you what is actually possible with this trading and the new Danielcode tools. I ran through some of these with Hank and Justin yesterday when they were doing their tutorial, and I can teach you how to trade this way. This is the full throttle version, and we can scale it back so it's a little less frenetic. Sometimes you just get maybe too many trades for some people. Other people just want the money, and this is the way to get it. So I'm going to start with the S&P E-mini. Remember, this is a market. The margin now is up to $5,000, and I'm going to ask it to run a series of variables for us. And as I say, a lot of you already have this program. You can check this out for yourself. And I'm going to ask it to run for 3 months from June the 1st to the end of August. And I've cut down the number of variables. Some of the tests I run are 50 and 60,000 variables. And it just takes, a very, very long time because this runs on the Trade Navigator engine, which is only a single core engine. So no matter how grunty your computers are and how many cores you have, it will only run at that speed. And you'll see it coming up now as it runs through the 600 variables I've asked it to run through. And I've kept this fairly short and sweet because I know your attention span is not unlimited, nor is our available time. But you can see it's run through that pretty quickly. And on the variables I've asked it to sort for me, it's come up with a profit of $32,700. Now that has accounted for a commission. We have the commission in there at $5 a side. Excuse me, Chase will growl at me for lighting a cigarette, but those who know me will know I've given up all of my other vices many years ago. This is my sole remaining one, and I have to give this up too. Anyway, you can see this has run $32,000 for 3 months. Quite extraordinary, off a margin of $5,060 at present. It's had 27 trades in that 3-month period. There are 22 trading days a month on average. So it's having a trade about once every 3 days, which is, not too frantic really. And it's had 25 wins and 2 losses. Let me take you now to another market. Heating oil is a market I trade a lot, which I think we always use the 067 contract to test this stuff. That's a thing that Trade Navigator have invented. It's called a back-adjusted contract. You don't actually use it for trading or for your time and price analysis, but it's very useful for these continuously running programs because it back-adjusts the contract at rollover, and you get rid of the big gap. So this is heating oil. It's a terrific trading market. And on these 600 variables I've asked it to test. You can see down the bottom here what it's doing. It's testing HO3 from June the 1st to the end of August. And it's returned 28,700 after commission. Now remember, there's no slippage in here. So you won't actually get, yes, Chase is growling at me. You won't actually get these figures, but they're so extraordinary that if I teach you how to trade this stuff, don't worry about the slippage. It's a rounding error compared to what's possible. So this is looking at close to $110,000 over a full year. I'm just showing you 3 months here. And that also is on a margin of $5,000. And I'm trying to excite you about the possibilities in trading. I don't think you've ever seen this stuff before. Let's go and have a look at oil now, which is a pretty common market that a lot of you trade. And let's ask it to run exactly the same thing. And it should be coming up for you soon. Oil also has a margin now around $5,000. and you can see that it's going to return something similar. 26,000, it's over 100,000 a year. 24, it's in fact 124,000 in a full year. Remember, this is no slippage. This assumes you get filled right where you want to, which doesn't always happen, but normally you do. Akhtar says he had bad slippage on DX. Might have been a fast move. I mean, slippage is just a function of trading. It's if any of you are married or have children, then you have some good days and some bad days, and sometimes you have a problem with slippage, sometimes you don't. But Akhtar, it's a very good trading market, the US dollar index, so let's run it here, and I'll show you what is possible if I teach you to trade this way. So we've asked it to run off exactly the same variables. It's returned 11,000, so that's about 44,000 over a full year. And for DX, the commission is 2,300. It used to be a lot less than that, but the margins have been pushing up. So 44,000 on a margin of 2,300. You can do the math. It's pretty sensational. Let's get rid of that, see what else I had. So stick with the DX, Akhtar. It's a great trading market. I wanted to show you, excuse me, I wanted to show you a Forex pair, just to show you that all these markets actually work exactly the same. Forex people think that it's a unique discipline, and futures people think it's a unique discipline. But if you have the Danielcode numbers and the Danielcode time and price ratios, they actually all work very much the same. The variance being whatever the exchange or the brokers have set the margin at, because all of these returns have got to be calculated as a percent on margin initially. I know there's all sorts of other ways of calculating them, but that's the fairest and truest way. And how well these markets do is a function of tick value times average range as a percentage of margin, and the exchange sets the tick value when they design the contract. They do change it periodically. DX has had a half point put into it. Used to trade in hundreds, now trades in 3 decimals. But the biggest way they change the value of these markets is by adjusting the margin, which is for the protection primarily of brokers. Don't forget, the exchange started as owned by brokers and still operates really for the benefit of brokers. And you'll find in the more popular markets, the S&P E-mini and those sorts of markets, the margin is much higher than it is in the more esoteric markets, which I'm going to show you in a moment. So here's a currency, 19,000 for a quarter on a margin of, depends on your broker, but somewhere under or around $2,000. Pretty extraordinary. So that's close to 80,000 in a year. And I'll now show you a market that is a real trader's market. I trade this a lot. This is RBOB. This is gasoline. For those of you that haven't traded it, this is the example of what happens when you get into a market away from the commonly traded one. This is what I call a commercial market. The players in this tend to be commercial players. A lot of hedging for future production requirements in this market, and the people who trade it are very sophisticated, which means that the margin is small compared to the tick times average daily range. So you can see this thing's going to return for this quarter about $44,000. Wow, it's 180,000 odd dollars in 12 months. It's 176, I think it is, in 12 months. Theoretical, remember this is theoretical. You do get slippage. You don't always get filled where you want to. And the margin for a gasoline has shot up. So there must be a lot of retail traders playing it, but it's now up to 5,800. It's still an extraordinary return. And I want you to think about these numbers I'm showing you, because they're showing you the possibility of what sort of returns are really possible with trading. And then they say, well, look, if it's too good to be true, it probably is. Well, what's the trick in this? One of the tricks in this is pyramiding. And to pyramid, you need to have a standby facility so you don't exceed your margin, or else you need to, as you pyramid, you need to close out the last contract and just keep adding the new contract, in which case you only get about maybe 50 to 65% of the benefit of pyramiding. But pyramiding is a very, very big tool in increasing your profitability. And you'll recall right at the start of this webinar, when I showed you the email I'd had from Bernard, that he's pyramiding. He does his ante and then he scales in, which means adds positions, and scales out, which means reduces positions. So that's one of the tricks in this. But pyramiding adds actually very, very few trades under this program. Maybe, I think when I looked at it with Hank and Justin yesterday, 3 or 4 additional trades over a 3-month period, but it more than doubles your returns. So effectively what that's doing is when you get a big, fast move, you're able to capitalize on it to a greater or lesser extent. And I can teach you how to do that, and also teach you how to do it without increasing the size of your trading account. And your second trade can go on to day trade, where you have a very reduced margin, making sure you're flat in at least one of those positions at the end of the day. Okay, that was that. I think I've pretty well done what I wanted to do today for you folks. Let's see what else we've got. I think we've run through everything of interest there. I've shown you why these markets turn and where they turn. And let's see what questions I have to deal with here. Not a lot. You're all very quiet today. Akhtar's got the most to say. NQ, NASDAQ. Let me have a look at that. Greg, you want to know about that? Let's have a look. Right, let's see what we've got here. It's on the other computer, Greg, so just bear with me while I get there. Here it is, NQ. Yeah, pretty nice. We've had some lovely trades in this, and it's currently on a buy. We had a buy signal for this, Greg, for Wednesday, which I'm sure you saw. We had a TO3 buy on Wednesday, which was duly elected, and it was elected and went up a bit, and it went up a bit more today. If you want to know more about that, do please send me an email so I can prepare a chart for you, Greg, at the next webinar. Akshay, can I cover Nifty next webinar? I can, Akshay. I'm waiting for you to become a member again and bring all your friends, because we need a bit more interest in the Nifty for me to continue doing it. It may doesn't seem to have sparked a great deal of interest in India. It's interesting. If you search Nifty, you'll find there's about 5,000 analysts doing forecasting and signals on it. They haven't got a clue. And our signals on it, I must say, have been terrific always. So, Greg, you dropped me a line. Tony DD, how about the gold chart? Same thing. It's on the other. I can show you the weekly chart. Here we are. This is the weekly chart of gold, which turned inadvertently pressed the wrong button there, Tony. Here's the weekly chart of gold. This line has gone. We had target recognition for the blue line buy way back in July. Blue line buy and a fourth seal buy, and it duly ran up to the Danielcode retracement up there, and it's now just working its way down. This is the retracement from high to low. This is the retracement from August 28th down to the July low, and you can see it's it went down to the 1097.5 was our 74% retracement. That low was 1097.73, ticked off, rallied back up. I haven't put the upside ones on it, but we can start taking some of those off now. We don't need that one, and we don't need that one, and we don't need that one. And this 1121, it was tested, caused this little reversal up here. It's gone now, and there's our next target, 1112. Down there, if it keeps going down, its next number is 109,750. Let's have a look at the Tony. You can see the gold chart at the Danielcode website. It's under this tag metals right here. So you just get that to drop down and click on gold. It's running a bit fast at the moment, a bit skiddy. There it is. You've got gold, silver, and copper in there, so you can just have a look at all of those in there. Good, John Leisman, great webinar. Thank you, John. I'm glad you liked it. Missed the beginning. It'll be Coffs Harbour, a great place. Gosh, I love Coffs, John. I used to pull in there on my yacht Sidewinder when I was doing Sydney Gold Coast races, and anything else up north, we always pulled into Coffs Harbour for a night. Wonderful little harbour there. It's a great, great town. Big town now, I guess. I've been going there for so long. I keep thinking of it as a country town, but it's a big town now, probably even a city. Have a great holiday. You'll love it there. And Terry will hopefully get the tutorial video posted in the next 24 hours. He's had a pretty hectic time, as most of you should know. Trade Navigator had a fiddle with their live database on Wednesday night, which caused everyone with a 001 account to lose all of their Danielcode studies, stochastics, and everything else. And apparently the story was, I spoke to one of their directors yesterday about it. The chap who was handling it left suddenly after rude words with someone, and I just made that up. I don't know if they were rude words or not, but that's usually the reason people leave suddenly. And the new guy they had obviously didn't know very much about it, and he screwed it up, to put it simply. So all of us lost all our studies and data and everything else. Terry's telling me it wasn't. He's been in close touch with them. Everyone at Trade Navigator, just about everyone lost the studies. Not just the 001 account. So everyone, it wasn't a Danielcode problem. It's a Trade Navigator problem. It affected all of their clients. Okay, what else have we got? Have a good weekend, John. James, curious, LT for GBP and New Zealand NZD. What is LT? James, help me out there. GBP. GBP USD, GBP USD, long term, is it? Long term? Oh, GBP NZD, okay. Haven't got it, but I'll do it for you. James, if you'd kindly just drop me a one-line email to remind me, I will work that up for you and have it ready at the next webinar. Here's Hank. Most as stunned as I was yesterday. Yeah, Hank was pretty stunned when I showed him what the possibilities of all this were. Okay, thanks. Yes, James, I'll do that. Shoot me a one-line email to remind me, and I'll be happy to do that for you. Well, thank you, folks, for your attendance today. Sue, enjoy the circus. Thank you. I will come to Waiheke, Sue, and I'll teach you how to do all this stuff. and you'll never have to worry about anything in your life ever again. You probably don't now, but this just makes life so much better when you understand how straightforward and simple this stuff really is once you know the Daniel code. Folks, thanks all for being with us. Next webinar will be in 2 weeks, if not before. Bill and David, I'm glad you enjoyed it. Shoot me a really short email on anything you would like to see or learn about, and I will prepare the charts for you, have them ready for you at the next webinar. So thanks for that, folks. I'm off to the circus, and I appreciate you being with me today. I'll see you in a fortnight's time, maybe sooner. Keep an eye on the website. We'll post if we do that. Chip, what's happening? Chip's excited. Yeah, he is excited. Come on, mate. Get your act together now. Look, you're getting divorced. That's what's been holding you back, Chip. Get that done. Get it finished. Come to Waiheke. I'll show you how to do this stuff. I've shown you once, and I know you've got the Fractalian program, and you've done nothing with it, you and your mate Hovey. Get your tails down to Waiheke, fellas, and I will show you how to trade this stuff. Terrific. Nice to hear from you, Chip. Good luck, mate. Hope things get a bit better for you soon. And Greg, also appreciate your thoughts. Okay, folks, got to run. Bye. Thank you for being with us, and we'll get Terry to post this video for you as soon as possible. And of course, it's Friday down under here. The sun's shining. It's September, so it's warm enough to venture into the swimming pool or the surf. So off to the circus, and then a couple of Bloody Marys by the pool, which is pretty well what we do every Friday, which is wonderful. So enjoy your weekend, folks, and cheers. Bye-bye.